What is going on, penny boys and gals? What's going on, stock traders? And welcome to another trading psychology course. These are our live courses. We are going to be doing at a minimum 12 of them. Right now, I have all of those, all of the class, basically syllabus for this trading psychology course in that Trading 401 class channel. Right now, we are on week 7. That's psychological aspects of trading. Next week, we're going to be going over performance psychology. That should be a very interesting one. But today, we'll be talking about just evaluating trading systems, aligning your trading strategies with individual personality and preferences. I know a lot of people, might go on YouTube and see somebody day trading, or you might even come into Penny Boys and go on one of our live streams and see Ethan or one of our day traders day trading. They might think to themselves, "Oh, this person's making money, they have a strategy, and this is the only way to trade, this is the way I'm going to be trading," and not realizing that maybe day trading does not work for them and their personality. And a lot of people kind of fight what they're not technically what they should be doing, but what might align with them and their personality, their habits and their natural mindsets, and try to take on a strategy that doesn't really play to their strengths. And so these courses are kind of just about figuring out, who we are, not just as traders, but just as people as well, so that we can find which strengths in the market, whether it be a different strategy or mindset or whatever it may be, that we can use to our advantage, when it comes to trading. Nikki's talking about the force. Yeah, we're going to be talking about the force. I think I have one analogy in this class about the force, where we're definitely not going to be forcing any stocks to move, because as we all know, and Nikki knows very well, she's very, 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 very smart, or very, very just involved and just very smart when it comes to this trading psychology, because she has a major in psychology. She's been trading for a while now too. So you kind of mix those two together. And that's what we have at the end of this session. Nikki will be doing her rosebud thorn exercise. And I will let Nikki talk all about that once we get there. I don't want to ruin the surprise. But this week we will be talking about trading systems. We'll discuss how evaluating, aligning, and adapting trading systems can significantly impact our success as traders, and what all that truly means. All right. Well, that's why I paid to get here early. I know we just started the stream, for those who are watching after the fact, but we've been here for a little bit here. It's 5:30 right now. We start these at 5 p.m. Eastern in the Discord. So you want to come hang out with us, pre-stream, and definitely after the stream. We have some fun times. Definitely be sure to check us out live on the Discord. This is in the free live stream area every Wednesday starting at 5 p.m. Eastern. But before we dive into the psychological aspects of a trading system, let's first just talk about what a trading system actually is. So, a trading system has a set of rules and parameters designed to guide trading decisions, basically just guiding our trades. This could include entry and exit criteria, risk management protocols, and often includes technical analysis indicators or fundamental analysis principles. So basically just, why are we getting into XYZ trades? And, our plan, our system helps dictate that, as opposed to just opening your phone or opening your computer and just hoping for the best. We have a blueprint, in place. And in order to have that blueprint, we need to learn who we are as people, and, who we are as traders, our schedules, all this stuff, what works best for us, so that we can, sometimes trial and error, and just sometimes over time. Might take a month, it might take 3 years, but just to find the strategy that works best for us. And that's a trading system. So having a trading system is so important when it comes to consistently and successfully trading. I just executed order 66 on these nuggets, so spooky. It provides us with a structured approach to trading, reducing emotional interference and promoting rational decision making. That's the key, because once again, it doesn't matter how great your plan is, or great your strategy is, or how much you know about different indicators. If you have your emotions running wild and interfering in your trades, and you're not promoting, you don't have rational decision making, well, then the rational thing would be to follow your strategy, sell based off of a indication on the chart, or buy based off a fundamental analysis or technical analysis. That's the rational decision. The irrational decision might be buying because you see everyone on Discord talking about it, or on Webull comments, or because you just lost money on that one stock, you need to make some money back on that one stock, and you're going to revenge trade. Those are irrational decisions, and those are what kill traders, even with the best trading strategies and all the knowledge on technical and fundamental analysis. which is why, we're all here today doing these trading psychology courses. Stocks, you told me, JP. Oh, I think that might have been Pookie, right? Let's just quickly talk about some key components that just comprise a well-defined trading plan. So some of these components that make up a well-defined trading plan. The first one being clear entry and exit criteria. So define specific conditions for entering and exiting trades based on predetermined price levels, signals, or indicators. You don't want to just be going into these trades blind. You want to have a plan prior to getting into the trade. It's like setting the table before you eat. Most traders have their entry and exit levels plotted out well before they even enter a trade. And so they might, I know Jay, for instance, all the time, he'll go in and just look at like 10 charts, get all his levels out there, put them on the watch list, put the alerts onto his chart. So like when the price hits a certain level, he'll be notified. And then he just waits, and it could take a day, it could take 15 days, for the table that he set, to be ready to, I guess, be eaten on in this, weird scenario that we're talking about. But like, the point being is that he gets all these charts ready, and then he lets the trade come to him. And that's what a lot of established swing traders, especially, and even day traders do, is they have their entries, their exits, their plan ready, predetermined, ready and predetermined before the trade even starts. So it just gives you a plan, or gives your plan a clear set of rules to follow, which can give you better data when you determine if your plan is working or not working out. So let's talk about some risk management protocols. So risk management strategies could include position size management, which I know Pookies talks about a lot in Rags to Riches, meaning how much you put into each trade, because that is really important. Once again, it doesn't matter how much you know about technical fundamental analysis. If you're over allocating into trades, one of these trades, it might go wrong, and because you over allocated, you're going to lose a good amount of money. In order to make that money back, you're going to have to over allocate again, or start over from a much smaller position, or from a much smaller portfolio size. Neither of those are really great things to have happen. So that's why the goal is to not get yourself into that position, which a lot of us have done. This is why we're here helping you with these these courses and classes, so you don't make the mistakes that we did. And you're probably going to too, because sometimes you just got to do it in order to really understand it. I know that's how it works for me. I hear people saying, oh, don't do this, don't do that, but I don't actually understand it until I was like, oh, that does actually burn. Like, oh, that is really hot. Yeah, ow. So for some of that's why paper trading is really important. Starting off small is really important, so that when we do, burn our finger or whatever, it's not on a really, really hot open fire or whatever. It's just on something way less than that. I did my research. That's what's up, Fidget. So another effective risk management safeguard, or another reason why we have effective risk management strategies, is just to safeguard our capital and protect against substantial losses, which preserves our trading longevity. And that's so important, our trading longevity. I talked about this in the last class about basically this. Remember that 90% of traders quit before they actually learn how to trade. And this is because they don't have proper risk management techniques in their plan. And they typically take huge losses, which leads to them just leaving the market and just giving up. That's why what we teach here in these sessions is all about preserving trading longevity, so that you can last in the market long enough to find the strategy that truly works for you. Because it does take some time. Some people, it takes 3 to 5 years just to figure out what strategy works for them. Think about football. I always talk about Tom Brady. Like, imagine if Tom Brady started off trying to be a running back, and then, he tried to be a line, a defensive end or whatever. And then he decided, oh, football is not for me, before actually getting to, as a kid, getting the quarterback and realizing, oh, I like this, and then becoming Tom Brady. For all you might be the next Tom Brady of trading, but you're currently playing running back. And that could be swing trading versus day trading, or day trading versus swing trading, or options, whatever it may be. You might just be just trying to trade the wrong strategy that doesn't work for you. And a lot of the times, it just takes time in the market to to really just get that aha moment, and get to the place that you want to be, where your goals are. Trade management rules is also really important. So outline guidelines for managing trades once they're initiated, is including trailing stop loss levels and profit taking strategies. So this means taking it to the next step when it comes to your exit criteria. So it's not just about the where you buy and where you sell. We're now talking about the in between. So having guidelines for you for when you're in a trade to make sure you are managing your emotions and sticking to your plan is key. So once again, it's not just about, oh, I'm going to enter when this happens, I'm going to exit at 10% or whatever. When this happens, it's also about, what am I going to do to make sure that I adhere to that plan in between that entry and that exit. Because a lot of us struggle. It's not about, for some of us, it's not about the buying and the selling. It's about that in between. Maybe the stock's moving too slow, or we got a little bit of dip before, getting to target, whatever it may be. That in between for a lot of people ends up honestly just screwing us up in the market. And so having a plan for that in between, so a lot of us kind of just, all right, I got my plan for entry and exit, and they kind of get screwed in the middle because they're not ready. They haven't prepared for it. That's why having a plan for that in between, having guidelines for while you're in that trade, not just for the charts, but also just to manage your own emotions, so you don't get out of the trade early or hold on to or for 2 months or what it may be. Sticking to your plan is key. There is a whole different set of emotions that may kick in while you're in the middle of a trade that differ from the emotions you might feel when you enter or exit a trade. So it's also important to have a trading psychology plan for each of these instances individually. Because trading, there's a lot that goes on in trading. It's not, you're not going to just have one emotion the whole time, because entries, exits, and the in between. There's so much that can happen. Yes, I'll personally be holding a Tesla. Trade management rules ensure consistency and discipline in adhering to the trading plan throughout the life cycle of a trade. And once again, the life cycle of a trade is so important. A lot of people only kind of focus on one or even two of those aspects of the entry, exit, and the in-between, but it's so important to keep in mind all three of those. The goal, and we're going to talk about market analysis and research and how that can incorporate into a plan. The goal of our coaches program is to teach each of you a trading strategy that works for you personally. Having a plan that you understand and that works helps build confidence, which helps us stick to our plan as traders. That's where we trade the stocks. When it comes to finding them or maintaining that trade, because it's one thing about actually trading the stocks, is a whole other aspect when it comes to finding the stocks to trade or even maintaining the trade that you're currently in. Market analysis and research is so important. So 50% of trading happens, or I know a lot of people say different percentages, but a portion of trading happens after the bell rings. So a portion of your trading happens while you're actually in the market trading. But I'm talking about when we do our research, plot our price levels, prepare for the trading day. That is just as important as executing those trades, because you're executing those trades based off of a plan. And that's the due diligence, the market research, and all that kind of stuff, whether it is looking at the fundamentals and looking at the news, or just looking at the charts. And, it could be like what Jay does, and just strictly looking at the charts and just, taking 10 minutes a day to check out charts or this, that, whatever, that could be your due diligence. It doesn't mean you have to go looking through every single balance sheet that there is on the market. Whatever works for you personally. Contingency plans. I know Pookie's Revenge is a huge fan of contingency plans. I know you say that all the time. Anticipate potential scenarios and develop contingency plans to manage unexpected events or adverse market movements. The market is a wild animal at times, whether it's a crypto boom, the 2008 housing crisis, earnings plays, COVID. There's just so many different catalysts that can cause the market to go wild. Contingency plans provide a framework for responding to unforeseen circumstances while staying true to the overarching trading strategy. So it is good to, be aware that, big things could happen in the market, and you want to kind of be ready for, all right, so if we have a humongous catalyst that turns us into a huge, bear market or even bull market, what am I going to do to my plan, to adapt to that market? Whether it is something like, what happened with the, with COVID, where we had a huge volatile market. What are you going to do with your portfolio? Maybe the management of it, when it comes to your position sizing or your diversification. It's good to have that plan in place so that you're not just scrambling when it does happen, because it could happen. So, a lot of people who were trading, or just, we've been trading since, before 2000, they might have gotten hit with the, with COVID and, what happened to the market and not been ready for it. And they might have ended up, selling for a loss early, or, FOMOing into something, whatever it may be, because they didn't have a contingency plan. A lot of this is, once again, just setting the table before you eat, when it comes to these trades. And, the people who, typically do the best in the market are the ones who are prepared for it. Whether it is preparing the charts, preparing due diligence, or even just mentally preparing. And last week we talked about trading confidence. We did a bunch of different, we talked about different exercises that people can do to gain confidence. That's part of preparing for the market, or even just visualization techniques. Capital gains, a lot of time with taxes. Remember, a trading plan for a trader is like what a blueprint is for constructing a sturdy house. Each component serves as a foundational pillar. contributing to the overall stability and resilience of the trading system. Ensuring that all elements are in place is crucial, both for a house and for a trading plan. So it's not just about the technical analysis. It's not just about the fundamental analysis. It's also about your portfolio management and your trading psychology and the emotions and all that stuff. You want every single pillar to be solid. Otherwise, the house could crumble, or in this case, your portfolio. So ask yourself, do you have all these components in your trading plan? Is your blueprint strong enough to withstand the volatile natures of the markets and support your long-term trading goals? Building a solid foundation is essential to prevent the collapse of your trading portfolio. All right, so really quick, we're going to test your trading foundations. I'm going to ask 20 yes/no questions. Be kind of quick, so just keep ready for these. There's going to be 20 yes/no questions, and I want you personally to just keep track of how many times you answer no. And then at the end, I want to see what you're answering. How many times y'all answered no, and see. So what's some of the I know, because we've been doing this for a while for a few of us here. I saw Charlie. I know last time you surprised yourself with the exercise we did with the trading confidence exercise. So I'm curious to see if anyone here surprised himself during one of these exercises. So remember, yes/no questions. Keep track of how many times you answer no. All right. So first question is: does your trading plan have clear entry and exit criteria defined for your trades? Stick snowflake. Does your plan have predetermined position sizes mapped out for each trade you take based on predefined risk parameters? Number 3, do you diversify your portfolio across multiple assets or sectors or instruments? It could be real estate. Number 4, do you regularly utilize stop loss orders to limit potential losses or secure potential gains? Do you adjust position sizes based on the volatility of the underlying assets? So maybe instead of going as heavy as you would in crypto or in stocks as you would crypto, because crypto might be more volatile, is that something you do? Yes or no? Have you considered using hedging instruments to mitigate downside risk? Do you monitor and rebalance your portfolio regularly to maintain risk exposure within predefined limits? Because Ethan would kill me if I didn't. That's funny, Charlie. Have you developed contingency plans to manage unexpected events to adverse market movements? I think it's the one. Do you conduct thorough market analysis and research before entering trades? Have you identified high probability trading opportunities that align with your trading strategy? Have you defined your risk tolerance and adjusted your trading plan accordingly? Have you aligned your trading strategy with your personality, risk tolerance, and preferences? 3 more questions. There's actually 15 questions total. Do you have a clear understanding of your trading objectives and goals? Have you documented your trading plan in writing for reference and accountability? Have you sought feedback from mentors or peers to evaluate and improve your trading plan? So how many no's did you get? I'm curious for all of you. I'm assuming some of y'all probably know what the no's would mean. So in theory, if you got 15 yeses, this means that your trading plan has super duper strong foundation. You have full confidence in your plan. Nothing to worry about at all. I have one nose. I'm just reading the chat here for a second. So the yeses is all would be a full. If you get 15 yeses, you're looking pretty confident, pretty good. If you got like 0, for instance, if you couldn't say yes to any of these things, this is something that is not a problem. It just means that, we could, work on the plan, because you might once again have a great understanding of technical analysis, fundamental analysis, but, you might be struggling with the plan, and that might be why you might be struggling, or vice versa. Maybe someone has a solid plan and struggles with the technical aspect. There's always something that can be worked on here. These courses and just all of our sessions, throughout Penny Boys, not just mine, but Rags to Riches, the all the coaches programs that help kind of figure out where our possible weaknesses might be, so that we can either work around them or manage them or even fix them. Tick 96 says 11. Nice. That's a nice solid plan. Cat got 9. Charlie says 4. Victorious 8. Stickman says 7 to 8. I felt attacked, so I stopped counting, said Nikki. I have many worries, but it's not reflected here, says Charlie. 9 billion, says Duco. So once again, this is now. We might go back to these questions, in a few months or so and see if that's the same, or even if you just want to hold yourself accountable. You have recordings to this class, so you can just go back and just listen to the questions back and just maybe in 3 months see how many no's you get this time versus how many yeses, and see if you are progressing. Because we're not going to be as traders. It's not a sport where we're competing against other people or other traders. The only person that we're competing against is our past self. And so not just about how much money you make versus this month versus last month. It's also, did you make good decisions in your trading journey or trading plan? So now let's examine trading systems from a psychological perspective. Different systems can bring about different emotional responses from traders. For example, and I know a lot of you do these different types of trading. I know some of you do one versus the other. So some of this might apply to you and some might not, depending on who you personally are as a trader. But we have momentum trading. So momentum traders seek to capitalize on the continuation of existing trends. They may experience fear of missing out, or FOMO, when entering trades late in a trend, seeing as they are riding the momentum and not catching the reversal, or anxiety when facing potential trend reversals. So has anyone here ever experienced that when it came to momentum trading? Maybe a FOMO because you're like, oh, I didn't get in early enough. That was when the reversal happened. I'm getting in too late. It's about to reverse on me again, as opposed to following, a specific plan. Whereas I'm entering because of this indicator, and I'm going to exit once the price, maybe breaks the VWAP or this, that, whatever. Yeah, we got ticked. Yep, I know. And here's the deal. Me too. Actually, just the other day, or just I think either yesterday or today, I had that happen where it was a day trade for Uber options contracts, and that's exactly what happened. I was trading the trend, but because it wasn't, because I didn't enter at the bottom of the trend, I figured, oh, A, not only did I miss out on all this potential profit, is this trade worth it? B, because I missed out on the potential profit, then the stock, I'm maybe in only halfway through, the stock is going to eventually come down, this, that, whatever. I wasn't listening to the reason why I got in, which was an RSI divergence and a moving average. And luckily I did, because I got the best of myself, and I didn't panic sell, and I waited until an indicator on the chart happened for me, and that's when I sold and got my I think it was 12% profit, as opposed to selling for a loss. Takak is drinking the Kool-Aid, it looks like. Please not possessed. Soon we'll be getting y'all to be drinking the Kool-Aid over at Titan Trading. If you like what's it called, dividends, you're gonna love staking. Momentum trend. So next we're gonna be talking about mean reversion. When, says Chag. Don't worry, Chag is coming. Right now we had the coaching program roll out. That kept me very busy. And then we're doing this whole trip thing. But once I get a little bit more time, then Titan Trading is next on the list. It's my hit list. Nice reverse. I have a lot of ideas, and you guys know all about that. But mean reversion. So mean reversion trading, this is an interesting strategy. It's a strategy, I personally don't do it, but a strategy based on the belief that asset prices tend to revert to their historical average or mean over time after deviating from it. So this deviation could be due to the overall market sentiment being extremely bullish or bearish, temporary imbalances in supply and demand, or even news events. We all know how news events might mess up some of our trades. And cause a lot of panic selling or FOMOing in, like nice reversions. Mean reverse traders capitalize on these deviations or big moves up or down by entering trades when prices are significantly above or below their historical averages, anticipating the price will eventually revert back to the mean. So one way traders might do this is with the 20 or 50 period moving averages, or the VWAP. So when the price goes significantly up or down away from the VWAP or moving averages, these traders might enter a position with the anticipation the price will move back to the VWAP or the moving average line. The Bollinger Bands has a middle line, which is a moving average, typically 20 period, with an upper and lower band that is 2 standard deviations away from the middle line. So that the Bollinger Bands actually kind of show you those deviations and show you when the stock is getting, either getting farther away or closer to that middle line. And so some traders use the Bollinger Bands to, trade to do this mean reversion trading strategy. So traders might buy when the stock is at the lower line or short at the top, assuming it will come back to that middle line or to the mean. I thought he was Sakak's cousin. All the letters. So mean reversion strategies may lead to frustration or impatience during prolonged periods of market divergence from the mean. Once again, just like with any trade, when the thing that you're hoping to have happen, which is that, the stock price come back to the moving average or whatever that mean is, and it's not happening, panic can set in, frustration, impatience, and I have to get out of this. It's never going to come back. It's not going to follow my plan. And hoping, as Pookie says, exactly. And so, I personally don't. I mean, I know there are strategies that involve this that are a little more intricate than just buying when, the price goes away from an average. But and I know Pookie is actually with his Stocks Buddy indicator talks about that, or not talking about, like, can help with that a lot. Pookies. Scalping is another thing. Scalpers execute numerous trades in a short time frame, aiming to capture small price movements for quick profits. So these are basically people who day trade, but their trades can happen in a matter of seconds, sometimes seconds or even minutes. But I sometimes like a lot of times it is seconds. Very hard to follow when it comes to like alerts and stuff like that because of how quick they are. Scalping requires intense focus and concentration, making traders susceptible to stress and burnout from constant monitoring of price action. So if you ever find yourself just getting burnt out every single morning because you have to stare at the charts or this, that, whatever, then, and that's fine. Maybe something like swing trading or even, some other type of strategy might be better for you. And it's not, you can go back to day trading. I've tried every single strategy there is out, not every single type of trading there is, just to see which one, works best. And some of them did not work at all, and that's totally fine. But you don't know until you try, kind of deal. Snow stops hitting me. Is it snowing there, Duco? No. What do you? Oh, snowflake. Okay. I remember you showed a picture. Someone showed a picture of snow like the other day when it was like 70 degrees here, and it's raining. So once again, so that's scalping. Swing trading, I know a lot of us are very, 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 very knowledgeable about because of the Mad Maverick or Mr. Stocklaw Profits or Lee, his coaching session. I think he has like over 70 members in his section. So a lot of swing traders, as well as with Jay. So many names. I know, right? I only got 2. I got What the Duck and Metamat. He has 3 now, so he has me beat. So swing traders, as most of us know, hold positions for several days to weeks, aiming to profit from short to medium-term price fluctuations. So swing trading requires patience and discipline, as a lot of us know, to withstand temporary price retracements or adverse market conditions without exiting prematurely. And so in that $250 channel or challenge channel, and once again, this is not an alert channel, not something where you're meant to be taking any of these plays. Is only there for y'all to just watch and to learn from as far, because I'm more so focusing on trading mindsets and psychology with this account than I am strategies. Like I know Ethan will teach you a day trading strategy and how he buys and sells stocks and finds them and all that kind of stuff. Jay and Lee do the same with swing trading, Bull with options trading, Pookie's for free for dividend trading and that type, the passive options types of trading like that. But this channel was more so just about trading psychology, different things that people can learn, or that I learned throughout different trades, why I might have yelled into this trade by accident, why I didn't follow my trading plan and how I can do better next time. It was more so a trading psychology follow along. And today I did YOLO into a trade. Luckily, it ended up kind of working out for me. But I'm starting to realize the reason being is because swing trading, which is holding positions for several days to weeks, aiming for profit from short to medium term price fluctuations, this is not 100% for me unless I have another outlet to let out my impatience. Everyone, we have emotions, and we could try to suppress them and be robots or psychopaths or whatever, or we can learn to manage them. And so my way of managing it, and if those of you who follow the account, is I opened a YOLO account. I know Prime Patrick talks about this all the time. Me and him are very common in this sense that we want to trade responsibly. We want to have a nice swing trading account or a dividend account, and not having to worry about anything else. But we just can't, because we are degens at heart. We like the excitement of trading. It's not just a job for us. We also want it to be fun. And so that being said, I can't just only have one account and have it just be stocks and swings, whatever. Because I'll get bored, I'll get impatient, I'll have all these emotions pop out. I'll get FOMO because I'm always on social media. It's my job to be on Twitter all the time, figuring, and keeping it with market news. So having that as your job is to literally just read FOMO all day. Chances are you're going to FOMO all day. And so that's why I do have this YOLO account, to keep my money safe, because I have my main account, which, in this scenario is my main account, is the money that I can't afford to lose. And then my YOLO account is money I can afford to lose. Just like people go out for a drink after work, they go to the bar. If you don't have money to afford to go to the bar after work, you probably shouldn't do it, or find a way to make the money to do that if you really need it. But point being is that I wouldn't be doing this if it wasn't with money I'm not okay losing. And so that's really important to realize, is that YOLO accounts are not your savings account. It's not your main trading account. It's a very, very small account that you're just like, what happens. Pookie says that I threw 90% of 50K into Neo to demonstrate the concept. I can't. Oh gosh. I got a big invitation. I had to separate my big girl account from my YOLO account from Pookie. Yeah, that's honestly what it is. Being DJ in the markets, like those kids that say they knock out drill stars and they got in their face and they're just being matter. But, I personally, as much as I love swing trading, Carnival Cruise and American Airlines and all that, I also equally enjoy the thrill of a good NFT project or crypto community, or, an options day trade that might work out, might not. But I don't enjoy that thrill of this money that I cannot lose. And that's why it's important with these YOLO accounts to, and if it goes 5X, then what I would do is either, you have options there. That's the whole, you should, ideally you have a plan ahead of time, like we were talking about before. You want to have that, you want to have that plan ahead of time, so you're not just kind of scrambling. You can do one of a few things. You can either continue just trading with that account, with the 5X in there, or put the profits into your dividend account, or put the profits into your stable swing trading account. Once again, it's really what your goal in the market is. If your goal in the market is to make, if you're young and to make a lot of money long term with investments, well, then maybe you want to throw into dividends. But if your goal is just to have fun, you're doing well in life, you have a job that makes you a lot of money, and you have everything you need, and you just going to the casino, it's like, why not? Or going to the bar, then you can do whatever you want with it. So it really depends on, no one person can tell you what to do with your money, because it's your money and they don't live in your shoes. Everyone's unique. And so we can tell you different things that other people have done, what we've done in the past. Me personally, if these YOLO accounts were the same, the amounts of money for me personally, that would be a main account and money that I'm not okay losing. If I 5X my YOLO account personally, I would make, I personally, and I'm not saying you should do this, and this is a great example of why because Kuku will tell you the complete opposite, I guarantee it. I would just make 5 separate YOLO accounts. I'd make a Solana wallet and start YOLOing into some meme coins. I would make a Near Protocol Meteor wallet, probably make a day trading options wallet. Maybe I'd throw some into NFTs. And that's just what I would personally do. And then if I 5X any of those, then I throw that into dividends or into long-term investments. But that's just me personally. Someone else will probably tell you the complete opposite. And once again, it's really up to you and what you think will work best for you in the market. One has to hit, says Snowflake. And I wouldn't do that over and over again. I would do that probably the first time, just in order to get that shotgun effect with these memes and all that. Okay, I'm going to share Rosebud Thorn, but it's sort of out there. Hey, the more out there, the better. That's what we're here for. You already see it as you don't have it. Exactly. Yeah. To me, it's, this isn't money I'm not trying to look, if I make a Lamborghini money off of because people do, I know people firsthand who put $100 into a freaking Joe Biden coin or whatever and got, a couple tens of thousands, enough to buy a car or something. If that's the case, I'm not just going to throw that in. I'm going to buy things I need. Someone else might just throw that back in the market because why not? It once again depends on what you need in your life and your goals. Some people have kids, some don't. Some people have, plan on having dogs, and that's it for the rest of their life. They might not need to worry as much as somebody else. And so, everyone is different, with priorities and all that stuff when it comes to just life. And, that's why we need to be aware of that when it comes to our trading plan, and not just, just because Ethan does XYZ doesn't mean that I'm going to do exactly that, because I don't live in a college dorm. I don't have the same life that he does. You know, we're at different stages in life, and this is what it is. I can use some of the strategy and for the bits and pieces that work for me, but I'm not Ethan. So like it's just it's going to end up being different for me than it is for him. But that's why I like to take little bits and pieces of, like, for me personally, I use a lot of Pookie's strategy and a lot of Jay's strategy. I love Jay's technical analysis strategy, and I love Pookie's strategy when it comes to using the stocks buddy. So Jay, I like to use his strategy for swing trading. I like to use Pookie's for the more of the day trading stuff. I actually tested that. One just needs to hit. Oh, geez. Where did you throw them into? Delist and Rocket. Yeah. Oh, like you were throwing these in like OTC and stuff, or was it all into one? No, definitely not. No, and it's not a strategy if you're trying to make money. Once again, YOLO accounts are not to make money. It's to let your YOLOing out, let your emotions out. And a lot of people think like, oh, YOLO, it's so I can either 100x or lose everything. It's like, no, that's not for everyone. That's not the only reason why people have YOLO accounts. For some people, it's just to just have a healthy environment to let loose, so they don't do it in their main account. Because I don't want to be doing all that stuff, because it's just going to happen to me naturally. I have emotions. And I'd rather do that in a YOLO account than in a big account. Event-driven trading. We were talking about swing trading. There's another one that's event-driven trading, and this is the opposite of what BTCJ does. Event-driven traders capitalize on market opportunities arising from specific events, such as earnings reports, economic data releases, or corporate announcements. I know we do have, if you don't mind tagging the channels, we have a bunch of great channels that have market news. I know we have like a watch, not just like our watch list, but there's also that the stock and crypto report channel. There's a whole bunch of different channels we have that give out different news articles. I know Jersey, our wizard, posts a whole bunch of great different news articles or different things that are going on in the market and with different stocks. That is another way that some traders do trade, is just based off of the news, trying to get in, trying to get there early. Some people try to get into the stocks early based on the charts. Because of maybe a divergence, they can get into the reversal before it starts to reverse or whatever it may be, or they know when to plan that for the reversal and wait for the confirmation. The same deal with event-driven traders. They could, they do enough research, they could ideally, for their plan, ideally figure out that, oh, this company has XYZ in the pipeline. There's a good chance that XYZ is going to happen, or that this catalyst will happen. This news will be announced. It might be a biotech company that they know a trial is going to go through, or they have really good reason to believe a trial will go through. Whatever it may be, they did their due diligence and their analysis on the events, the companies, whatever it may be. Same deal as doing that on the charts. It's just a different environment, different ball field, I guess. So event-driven trading requires adaptability and the ability to make quick decisions in response to rapidly changing market conditions, which could lead to stress or anxiety during high impact events. So for those of you who don't deal with stress well, this might not be the best type of trading, because it's strictly based off of events, and because of that, anything can happen. Good news can come out and the stock can go down, for all we know, especially if you aren't doing technical analysis or looking at the balance sheets and all that kind of stuff. 0.5 of Carvana. We were talking about that one before. There's also trend following. This is trading with the trend. Trend followers may experience frustration or doubt when trends temporarily stall or reverse. So basically, this tests their conviction and discipline to stick with the trade. So if you're following the trend, it is really easy to see a few red candles during an overall uptrend and panic sell. And so, like, if that's something that happens to you a lot, if you panic, maybe that might be something that you would avoid, or just start to learn how to manage the panic a little more during those situations, which mean finding the symptoms. We talked about that, I think, 2 classes ago, how important it is to find your symptoms, of emotional trading, whether it be, it could be that your heart rate starts to pick up, or you start to sweat, you start to tap your finger, you go on YouTube, whatever it may be. Like, there could be certain, things that trigger different emotions. And so if we could figure what those are, figure those out before they even happen, we could ideally learn to manage our emotions in a much more productive way. There's also the opposite, which is counter trend trading, basically reversal. You're basically trying to catch the trend reversals going against the existing market trend and sentiment. So traders employing counter trend systems may encounter anxiety or fear of missing out, FOMO, as they go against the overall market trend. They might feel like they are swimming against the current, which could lead to emotional stress and indecision. So these are different emotions that you seem like that you feel like you experience a lot of the time in trading. Well, then once again, this type of trading might be something to avoid or just to be aware of, when it comes to that. There is also day trading, which we all are very aware of. This is making trades that are within the same day, not holding stocks overnight. Day traders face the pressure of making split-second decisions in a rapidly changing market environment, which can lead to impulsive behavior and over-trading, as traders may feel compelled to take action in response to every single market fluctuation. So if every little candle gets you stressed out, there's a good chance that day trading just might not be for you, and that's okay. It's the same deal like, why being a linebacker might not be for Tom Brady. It's because he's not humongous. That's okay. He can try his best, and maybe, he did some crazy workout plan, this, that, whatever, he could do it, but it'd be a lot easier for him to find that QB position, find a strategy that works for him and do that instead. There'd be a lot less resistance. No, we still have trivia. It's going right after this. Day traders face they face the split-second decisions, which could definitely bring about emotions. This is why it's so important to know yourself as a person and your trading psychology before you decide which trading strategy you decide to implement into your plan. And that's why we, in our Get a Coach section or Get a Coach channel, you'll find an assessment a form to fill out in there. We use this to help pair you with a trading coach. The goal of that is, and there's actually a trading psychology, I think like 15-question assessment in there that helps kind of assess who you might be as a trader, psychologically speaking. And the reason why we give that to you, and before getting a coach, is because we want to make sure that we are helping you find a coach and find a strategy that aligns with you as a person and as a trader. We don't want to try to force a strategy just because someone heard that day trading is the only way to make money or whatever. We talk with the members and really try to find out which strategy works best for them and why, as opposed to, hey, Ethan makes a lot of money, so will you, because that's just not how it works. Just because Ethan makes a lot of money day trading, Chag might try his strategy, try his coaching program, and it might not be for him, and that's okay. And he might go into Lee's and kill it, just do amazing. And that's why, this is so important to find the correct strategy, the correct coach. That's why here in Penny Boys, our goal is just to keep you in the market. It's just, once again, that trading longevity, because once again, sometimes it takes 3 years or more to get that aha moment, to really get that strategy to click. And then it's just like, riding a bike after that. Because there's so many emotions, there's some emotions that some of us have that don't match well with a certain strategy. We really just want to go over, each individual person, as opposed to just saying, hey, here's all the coaches go for it. Basically, one size does not fit all when it comes to trading. It's essential to align your trading strategy with your personality, risk tolerance, and preferences, and important, your trading goals, because everyone does have different goals, life goals, monetary goals. So there are a bunch of psychological factors that significantly influence trading strategies. Chag. For example, there's risk aversion versus risk tolerance. Risk averse traders may gravitate towards conservative strategies with limited exposure, such as swing trading, dividends like Pookie's teaches, or long-term investing, while risk tolerant individuals may embrace more aggressive approaches, like myself, such as options trading, leverage trading, day trading. So Ethan and Jay, they're more on the risk tolerant side of things, whereas like Lee might be more on the risk averse. I'm curious, for those of you in chat, do you consider yourself more risk averse or risk tolerant? Emotional resilience is another factor. Strategies requiring adaptability and resilience are well suited for traders who can maintain composure during turbulent market conditions. So if you struggle personally to maintain your composure just in general, or in the markets, then maybe day trading or scalping just might not be for you for now. And that's okay. Risk adverse, this says Tick 96. I'm tolerant, says Chag. I'm an adventurer. You got the adventurous trader, right? I do remember that. Yeah, you and the dude, I remember both got that. The big ones, they got that one. I was not surprised. That's emotional resilience. Your perspective on trading matters too. Those with long-term perspective and patience may prefer longer-term trading strategies, whereas whereas those with a shorter time horizon and a preference for active trading may prefer day trading. So your trading goals are a big factor in this, as some people are here just to make enough money to splurge on a car, which is fine if that's why you're here trading. And then some are here to build a long-term portfolio, or retirement money, or money for their kids, whatever it may be. Everyone's goals are different, and because of that, their strategy is going to be different. Intensity matters too. Traders who thrive on excitement, like myself, and adrenaline, probably like Chag, may gravitate towards high intensity strategies like day trading, scalping, crypto, NFTs, leverage trading, or short-term momentum trading, which require quick decision making and rapid execution. This could also work for traders who thrive in a volatile market condition and can maintain composure during rapid price fluctuations. Then there are those who prefer calm and patient strategies. So those of you who cannot deal with rapid price fluctuation, you don't get the excitement or adrenaline, whatever it may be from that, well, the crypto market or NFT market might not be for you, because those are very highly volatile markets. And it is what it is. Market conditions are ever changing, which requires us to adapt to our strategies accordingly. So flexibility is key to navigating changing environments in the market. So during periods of heightened volatility, maintaining emotional balance and sticking to a predefined risk management rule or plan becomes really crucial, especially during these heightened volatility areas. I know a lot of people want to just jump headfirst into the market when they see volatility, because that's where for a lot of people, that's where the profits are. But it is good for some people who don't have that type of mentality to possibly some traders prefer to sit out during these types of markets, or stay heavy in cash, while others thrive during them and go heavier in the market when there is volatility. So just because, for example, Tick 96 might be going very heavy in the market during highly volatile times because they're day trading and they're making money and it's working for them. Let's say Chag, the swing trader, let's just say, theoretically speaking, might do the opposite and decide to go more cash heavy and prefer to wait until the market settles down and he can put more investments into long-term types of trades. Everyone's different. It's also important to realize when your strategy suits the current market conditions and when it doesn't. Strategies that perform well in trending markets may struggle in range-bound conditions. So when market's volatile versus when the market is just kind of consolidating or just trading in a range. So some traders will adapt their plan for one market based on the other accordingly, while others just simply sit out and just wait for the market they prefer to trade to come back in. So some people, once again, let's say I trade best during a trending market, during a trending market versus a consolidating market. Let's just say, I like it better when it's very volatile. So let's say volatile market versus a consolidation market. I trade better during the volatile market. So I have one or two things I can do. I can either have a different strategy for my trades when the market starts to consolidate, or I can just sit it out and maybe go to the crypto market or go to the NFT market or come out or go to a different market that is facing the volatility and that does have the conditions that I personally like to trade into. Wish I had an extra 10K thrown into Bitcoin right now. It's coming right back. Tell me about it. love me some DCA into Bitcoin. Dollar cost averaging. In conclusion, trading systems or plans serve as the backbone of a trader's success in the markets, as a lot of you who've been here for a while know. By understanding the psychological factors that are inherently involved in different strategies, aligning strategies with individual personality traits, and that's really important. You want to align whichever coach's strategy or whatever strategy you do in general with your personality traits, your individual personality traits. And by remaining flexible in response to evolving market conditions, so just basically being able to either adapt your plan or know when to sit out of the market when the market changes, we as traders can enhance our chances of achieving long-term success. Just remember, the journey of trading is just as much about mastering oneself as it is about mastering the markets. It's kind of like, Nikki, being a Jedi in Star Wars. Swinging the lightsaber is what makes them look cool, but mastering the Force is what made them unstoppable. For traders, knowing how the RSI works makes us look cool, being able to talk the talk, but mastering trading psychology is what makes us unstoppable. So think of trading psychology as the Force, and your technical analysis is your lightsaber. All right, so this is the last exercise, then we're going to give it over to Nikki. I'm going to quickly read off a few statements. This is going to be 5 statements. I want you to answer them 1 through 5. 1 being I strongly disagree, and 5 being I strongly agree with the statement. So 1 through 5, 1 is this is not me at all. I don't apply, this does not apply to me. I strongly disagree. And 5 being that you strongly do agree. All right, so this is 5 questions, and I want you just to keep track of what your total number is. Number 1 question is, I am comfortable making split-second decisions under pressure. Number 2, I'm emotionally resilient and can handle the stress of rapid price fluctuations without becoming overwhelmed. Number 1 through 5, 1 being I strongly disagree, 5 being I strongly agree, and keep track of your totals. Question number 3, I enjoy the excitement and adrenaline rush of fast-paced trading environments or uncertain market conditions. Number 4, I am comfortable taking big risks while trading as long as there is a potential for significant rewards. And number 5, I dislike the feeling of uncertainty when holding stocks overnight. All right, so keep track of your total answer. Do not say it yet. You can if you want, but keep track of what your total is. Maybe write it down somewhere, because we're going to do one last thing, and then we're going to put those two totals together. So the next set of questions, same deal. I just need you to answer them 1 through 5, with 1 being I strongly disagree, 5 being I strongly agree. So keep track of what your total is from the first set of questions. All right, first question is, I am patient and can wait for trades to develop over longer time frames rather than seeking quick profits from daily price movements. Number 2, I prefer to take a methodical approach to trading, carefully analyzing market trends and patterns before making decisions. Number 3, I prioritize risk management and capital preservation over the potential for high returns, preferring conservative strategies with limited exposure. Number 4, I can withstand temporary price fluctuations and market noise without feeling the need to constantly monitor my trades. Number 5, I find satisfaction in the process of conducting thorough research and analysis rather than seeking excitement or adrenaline from fast-paced trading environments. All right, what were your total scores for number 1, for the first set of questions and the second set of questions? I'm curious how they compare. So for the first set of questions, the higher you get, or the higher score total you got, the more you naturally might be geared towards day trading. Sometimes it takes self-assessments and self-analysis to find which style of trading suits us, because there's a lot more than just fundamental and technical analysis when it comes to trading. Self-analysis is just as important when it comes to finding a plan and foundation for trading that works. Sometimes the problem for a trader struggling isn't the charting or fundamental analysis, it's the fact that they're trying to force a strategy that doesn't align with who they are naturally as a trader. A lot of people get told, when they start trading is, to not day trade. And a lot of the times that advice is right, or no, I wouldn't say right, but is I guess would be considered good advice, because day trading is inherently riskier. There's a lot more emotions involved in day trading. But for some people, that's not the case, because day trading actually does align better for them. And it's actually less risky for them because it is geared, once again, geared towards them. Duck just called me Ern. All right, let's see. Snowflake got 18 and 21. And so the second set of questions are for those who, the higher you got, the more naturally geared towards swing trading you might be. And then for some of you, you might got high with both. And so maybe it wouldn't hurt to have 2 accounts, one for day trading, one for swing trading, or just, have one big account where you do both. Once again, this is just about self-assessments, figuring out, where we naturally might be more geared towards. So Tick got 14 on day trading, 16 on swing trading. And this is out of, this is 5 questions. Yeah, so 25. So that was pretty good. So you're pretty much in the middle there with both, a little bit on the higher side. Same as you're, looks like a little more geared towards the swing trading. Snowflake got 18, 21. Once again, a little bit more on the swing trading side. Ooh, Victorious got the first one, the first day trading side, 12, 11. So 12 for day trading, 11 for the swing trading. Takak as well. I'm not surprised that, there's Chag. I'm not surprised that Takak and Chag, like myself, got higher on the first set of questions. Y'all are very much like me when it comes to the markets, from what I've seen. You got 18 and 11 Takak, 18 and 15. 18 is very, very high when it comes to that day trading assessment. 17, 8, 18 Onrod, that's really good. Take care, Pookies. Oh, here you left. 11 and 13. That's a good one too, Charlie. So Tick, what did you get again? You got 14, 16. Yeah, so Chag and Takak, those are high numbers. So 18, and Onrod too, you got 18 for your swing trading. So that's something just to keep in mind, when it comes to your plan and all that kind of stuff. Did your answer surprise you? Was anyone thinking that they would get way more on the swing trading side or way less on, one or the other? I always like it when we do these assessments and you're like, oh, wow, like that's what, like, it's one thing getting it exactly as you thought, but like, it's really interesting when you do an assessment. It's like, oh, huh. Because that's when you really start to learn things and can, adjust. The last two questions was probably a 2. Last two of the last, it was I can withstand temporary price fluctuations and market noise without feeling the need to constantly monitor my trades. So basically dealing with ups and downs without always having to look at your phone to see every single penny go up or down. I think ADD and no patience. Same here, Tagak. Literally same here. Yep. I think I'd be geared for day trading if I could have more time in the mornings. And that's the other thing, Chag, I do struggle with. And that's another thing, it's a whole just another concept is that, yes, someone like myself or like Chag, we might be geared more towards day trading, but it might not fit our schedule. And schedule is very important too. That's what we do talk about scheduling when it comes to, which strategy you end up doing in the coaching program. But if that's the case, maybe, we could trade a different market that has different hours, whether it is a foreign market, Forex markets or crypto is 24/7, there's the futures trading as well. It really depends on, on how far you want to go into, trading based off of your personality or, seeing if you can make it work in, the market that we're used to. I know Forex is very popular for a lot of people because of the market times. They open their markets at different times. There's like 2 different big markets that open on Forex. The quick in and out I can make are mainly in crypto. Yeah. Crypto and Forex are very much known for just technical analysis, charts, and day trading is a lot of it. I think we go to, yep. You never know when. Yeah. All right. I'm going to end the recording portion because unless Nikki, you want to jump in the StreamYard? Question mark.
No, on the StreamYard, is that what you said?
You can do that, or we can just do it in Discord only.
We'll do this part in Discord only this time.
That's totally, yeah. All right, so those of you watching after the fact, make sure you come in live next time. We do this every Wednesday, 5 p.m. Eastern. We have our trading psychology stream followed by trading trivia. And in between, we have Nikki's special Rose Thorn Bud sessions. And so we're going to get into that right now. And for those of you watching after the fact, thank you for tuning in. And until next time, we hope that you all make some bread. All right, Nikki, all you.